Welcome back. Hey guys, we all anxiously wait the opening bell tomorrow because we saw 2 weeks of just strong earnings hit the street, and we're wondering where this tech sector or the memory sector is going to head next. But there have been some massive signals that were dropped in the news wires over the weekend. 3 big stories that I want to cover because I think they will tell us the direction that the sector is heading and who actually may be the winners as we move forward. Because we saw Apple do something that would have been unthinkable just a few years ago. And at the same time, Elon, he revealed a $16 billion investment in AI infrastructure in a single quarter. And then we had a debate between Goldman Sachs and Bank of America whether this tech is facing a massive earnings bubble or is it the greatest buying opportunity of the year right now. So we're going to dive into all of those stories because the AI demand is expanding into new markets faster than the semiconductor supply chain can respond. So if you hold shares in NVIDIA, Micron, SK Hynix, Microsoft, or Apple, you need to hear this video. You need to hear this update. So let's get started. But before we do that, make sure you hit the like. Make sure you subscribe to the channel. Guys, let's keep the engagement going. Let's keep Market Signal growing at the rate we have. So thank you for all your support. But if it's the first time you're watching this content, or if you've watched it a few times and you enjoy my channel and you've learned something and you haven't subscribed yet, do me a favor, just hit subscribe now. All right, let's get into the first story because I think this one actually is going to have a little bit of a ripple effect on Micron tomorrow because we know the algorithms, they just scrape the headlines. And when you see this headline, Apple tests Chinese memory chips as supply squeeze bites. And you see underneath, maker of iPhone talks to China CXMT, but any deal would be politically sensitive. We know just the headlines surrounding CXMT have been sensitive in this sector, and they definitely have affected Micron and the other memory players. So for this article to be in the Wall Street Journal, it very well could have an impact on Micron as we head in towards the opening bell tomorrow. We'll have to keep our eyes on the pre-market heading into that opening bell to see the impact, and we can certainly watch what SK Hynix and Samsung and Kioxia are doing in a couple hours when their markets open up. But I think this could ultimately have an impact. But you ask yourself the question, why would Apple even explore a supplier that creates so much political friction with Washington? And the answer is obvious. It's all around the supply scarcity that we see in the marketplace. This is what we've been talking about. And it also makes me think that the Citi analysts downgrade on DRAM kind of flooding the market or just pricing softening next year. Again, I cannot find any evidence of that. But this article, let's walk through it together and what it means. And essentially, it says that Apple has held early talks with CXMT about supplying components with the goal of them using their components in some devices that are sold in China. Obviously, they can't bring the devices here. They can't import CXMT's product here into the U.S. So that would be against the White House or to be against the administration right now. But they are hoping that they get the White House's blessing to do business with the Chinese company. We are seeing some original equipment makers like HP and Acer. They are already using some of CXMT's devices in their lower-end laptops right now just to alleviate some of the memory supply strain that they feel. But we know that federal rules prevent U.S. companies from transferring technology to CXMT, including any communication about technical details and product specifications. And the reason for that is they just are worried that they will steal some of the tech. Quite honestly, that is the concern overall. So this restriction effectively, it stops Apple from ordering custom chips from CXMT. But the rules do allow Apple to use off-the-shelf CXMT components and to negotiate prices with the Chinese company. Now, some U.S. policymakers, they fear that CXMT, if they get orders from leading American companies, the memory chip maker will gain access to American know-how and more funds to advance its technology. They say that could help Beijing's military and undercut the U.S. player Micron if they're able to supply orders or get components from CXMT. So there's a bit of a protectiveness that is happening here with the U.S. company, particularly Micron, which is the only advanced memory provider, as you know, that is here on U.S. soil. So CXMT's memory chips, though, they could force Apple to redesign certain parts of their products. So there is a little bit of, I guess, headwind for Apple even to using them. We also know that the price, there isn't a price discount on CXMT. They're actually priced very similar to both SK Hynix, Samsung, and Micron and their components as well. But it does say that CXMT wouldn't be a panacea for Apple because the Chinese company has maxed out its production capacity this year, leaving little room for new international clients. So again, another sign that DRAM and memory components are just significantly constrained as we move forward. But CXMT's products are fetching prices on par with Micron, SK Hynix, and Samsung. And we know they use lower tech. They're not as great of a product as those three right now. So they're getting prices at the same level as these premium companies in Micron, SK Hynix, and Samsung. That's a bit of a surprise. But again, it shows you the pricing power and the need in the market overall. But CXMT is giving priority to its domestic companies. So that's another piece. Even if Apple was able to get some off the shelf, the supply would be very low. And of course, they would face some major headwinds here in the US with the administration. So I don't know if it'll happen, but Apple has been definitely floating it out there a little bit. They may be using it as a way to try to get leverage and to get some supply from the the big three companies. But it definitely shows us a supply scarcity in the market right now. And my fear with this headline is that it has a negative impact on Micron at the opening bell tomorrow. So if we see a gap down, this sentiment right here is part of the reason. But at the same time, I think we also have to look at what SpaceX said on their earnings call last week. We didn't spend a lot of time on the channel, but they did mention, and what Elon mentioned is that he is investing $15.8 billion build out of his artificial intelligence, the space data centers, essentially. And there are three big winners that they call out from this investment overall. Number one is NVIDIA. So NVIDIA, we know, won an exclusive commitment from Musk to supply all future SpaceX compute architecture. It is locked on space edge computing. It will add a lucrative long-term growth catalyst to the company that already has a robust enterprise ledger. And if we look at NVIDIA, we know they actually had a really strong week. So they ended on Friday at $223.96, up about $5, a little over 2.25%. But if you look at how they've been trading, almost 11.5% over the week, over 10% for the month. So it does appear that NVIDIA is moving away from this sideways digestion, and we're starting to see some movement for this stock, moving up towards 225. That would be a great sign overall. And if we look at their price target, their average price target is 302 from the analysts that cover the stock. Their fair price is 266. So we still see significant upside for NVIDIA in the marketplace right now. They were sitting down undervalued significantly. We know they are the bellwether of the entire sector, all of AI. It starts and stops with NVIDIA, if we're being quite honest. But this is a great stock. It's at a great price, and they keep getting more and more wins. And this is a significant investment that they're going to get from SpaceX. The second one was around SK Hynix. I almost jumped over it. So SK Hynix, we know that they are the leader in the HBM space. They have about a 50-60% share there. Elon, he pinpointed memory output constraints as the definitive bottleneck constraining global AI deployment. And he mentioned that supply is growing at 20% annually, but demand is surging at 200% or more. So there's a significant bottleneck there. And we also know that SK Hynix and NVIDIA, the SK group and NVIDIA, they signed a deal, a historic multi-year $500 billion strategic infrastructure and supply agreement. And that was centered with NVIDIA as well. So SK Hynix is well positioned in this build out that Elon is going to do with SpaceX. And then finally, it's Micron. And the reason for Micron, honestly, is because of how differentiated the company is across their memory products. It says Micron is reaping immense rewards from resulting supply void in DRAM as well as NAND flash. So we know that DRAM prices have been moving significantly higher because of the HBM wafer penalty. We see Samsung, SK Hynix, and Micron, they're devoting more and more wafers to build out HBM because they're getting a premium on that product, but it is driving up the DRAM prices because the supply is so low in the market. So they're mentioning how Micron has been taking advantage of that. If you remember, their DRAM market share moved from 22% to 25%. They're only one share point behind SK Hynix right now, which has a 26 share in the DRAM market. So they are making ingrounds there in a market where the prices are getting higher, where the constraint is so strong right now due to another market that Micron already benefits with, which is HBM. So as they go on to say that conventional memory prices escalate even faster than specialized HBM stacks due to the acute global capacity allocation shifts that we're seeing with the big three. Micron's operational blend positions them to get maximum margin exposure. So Musk's assessment that basic economic forces will drive memory unit pricing upward over a multi-year horizon, it ensures that Micron will remain an indispensable core holding for these tech portfolios. So massive investment from Elon and from SpaceX, and it's going to those three companies this article calls out: NVIDIA, SK Hynix, and Micron. And if we take a look at how the two performed, guys, SK Hynix right now is so down their ADR. It's 137.91. If we look at the fair price, they don't have a fair price yet, but if you look at the price, the analyst sentiment, they have a price target at 245.21. So a 78% upside for the stock. Now, I think it's 15 analysts that are covering it right now, the ADR. So I take that back. It's 14. So 13 of the 14 have a buy. One has a hold. And you can see the upside is 78% for SK Hynix ADR. And then finally, Micron. We know Micron traded down about a half a share point on Friday. And the after hours that we saw of leading into, ended on Friday, was up about $2.50. We'll see what happens in the pre-market of where it moves. My worry, as I mentioned earlier, is that headline in the Wall Street Journal at CXMT will have an impact on the stock. But this stock, we know if you look at the fair price of $871 or the analyst buy of $15.01 or $15.02, significant upside potential as well for Micron. So let's jump over to the debate that we saw with Goldman and Bank of America. As I mentioned, Goldman saying, is there an earnings bubble? And Bank of America saying this is the best buying opportunity of the year. But there's 5 big analyst AI moves that I wanted to cover. And you can see the headline, pullback in this stock is an enhanced buying opportunity. That's talking about Micron. It's coming from Bank of America. It's coming from Vivek Arya, the analyst that we talked about the other day, how he's standing firm with his $15.50 price target for Micron. But there's some other cool stories in this article I want to go through. One, Goldman Sachs has updated their conviction list. So they're adding Microsoft and adding Applied Materials, and they're actually removing Broadcom, as you can see here in the first column. They removed some other ones not related to tech, but those are the ones related to tech. And they're adding Microsoft because they believe that the company is positioning itself very strongly as the AI revolution shifts from training to the infrastructure and infrastructure towards the early stages of how to make AI work for enterprises. That Microsoft is really well positioned there. The Azure acceleration, so the improving AI unit economics and Copilot monetization that they showed on their earnings call. And they expect earnings per share to grow and accelerate from 12% in fiscal 2027 to more than 20% by fiscal 2029. And the reason they're adding Applied Materials, Goldman believes that the company is well positioned to gain share at top DRAM makers and leading foundries, given its exposure to the deposition and etch tools. And now here's the piece I wanted to talk a little bit about before we get to the Bank of America buying opportunity of the year. So Goldman mentioned that, is this an earnings bubble or a valuation bubble? And they say it's not a valuation bubble, it's an earnings bubble right now. Their strategists argue that the key risk for technology stock lies less in stretched valuations and more in the durability of their earnings growth. If we scroll down, strategists led by Peter Oppenheimer drew a sharp contrast with the dot-com era. Back then, he said valuations reached a much greater high, but then they came down as stock prices collapsed. This time, prices have adjusted more modestly, but earnings have remained exceptionally strong. Yet, even as valuations have compressed, implied future growth earnings have kept rising. Using a dividend discounted model, Goldman found a 10-year earnings growth CAGR has accelerated beyond the 2020 peaks. So across technology, there does not appear to be a valuation bubble, but there may be an earnings bubble. That's what Goldman is calling out. So I think the risk that they're saying right now is that, we have this earnings bubble, and the fact that if earnings growth decelerates even slightly, their fear is that tech stocks will re-rate downward very aggressively. So that's something we got to keep our eye on as we move forward. The investment, and will the earnings continue to keep up? Can we continue to find ways to monetize this AI investment? That is critically important for this entire sector moving forward. And then if we get down to Vivek's comments that you see here, it says Bank of America pullback and enhanced buying opportunity. So Bank of America has reiterated its buy rating on Micron with the 1550 price target, telling investors the recent pullback is an enhanced buying opportunity rather than a reason for concern. Memory prices and margins will inevitably normalize at some point, says Vivek, particularly as new capacity arrives in mid-27 through 2028. I actually think that's a little early in the estimate. I don't think we're going to see that much capacity in mid-27. 28, 29 would be my timeline overall. But he said that the recent reset reflects investors positioning ahead of this eventual downturn rather than responding to the fundamentals, which he said is continuing to improve. He calls out the earnings per share of $150. And even in a bear case where DRAM and NAND prices fall in line with historic downturns, earnings per share for Micron would still be near $100, well above the prior cycle peak of $12 in 2028. So this, according to Bank of America, this is a great buying opportunity for Micron. Now, the one that in this report that Summit Insights cut back was Western Digital. And we saw Western Digital under significant pressure last week. I think it was down 17% over the week, if my memory serves me correct. Now, they're cutting it back to a hold versus a buy based on some of the transition risk, they said, as they move from their ePMR to their HAMR technology and its hard disk drive. So this is the area where, honestly, where Seagate is ahead of Western Digital. They've already made the transition. And so I think that's why we're seeing the market reward that company more than Western Digital. But what Summit Insights says is their HAMR transition creates risk, expecting higher costs to weigh on gross margins in 27, with average selling prices per exabyte forecast to decline that year when HAMR drives begin shipping. And this is after 4 straight quarters of sequential increases. Despite the upbeat guidance, the shares fell last week. It was down 17% over the full 5-day week, as I mentioned, as forecasts failed to impress investors following a year in which the stock had tripled on expectations of sustained AI growth. Now, guys, this one paragraph I kind of disagree with, I would say. They're saying rising memory prices have slowed consumer electronics and replacement cycles, weakening demand in the PC and consumer hard drive markets. That weakness in smaller segments could offset some of the momentum for the company's core data center business. If you recall from Western Digital's earnings, 89% of the business or their revenue is coming from the cloud. 5% is coming from consumer. So this is why I say I disagree with this sentiment they're putting out, that the weakening in PC and consumer hard disk drives, it's 5 to 6% of their business. The other 89% of the business is thriving right now with data center. Now, will the HAMR transition create some risk? There's no question about it, it will. But these companies need to move to the HAMR technology, and they need to kind of continue to roadmap their way to the 100 terabyte drive. So they will continue to have the critical importance for the hyperscalers for the build out. But I wanted to share that with you because it was a sentiment in the article. And then, guys, the final piece I wanted to talk about was the shift to robotics. Saw this article. I thought it was really cool because what it was mentioning is the robotic phase is going to be here sooner than we think. And the demand for compute will be here sooner than we think. So humanoids are as much as a compute story as a robotics one. And as you go through, it says, humanoid robots can create demand for data center infrastructure, AI accelerators, memory, edge processors well before widespread commercial deployment begins. So the demand for memory and compute will be there well before we're seeing a widespread kind of commercial deployment of these humanoids. But the biggest near-term constraint is intelligence, as humanoids must perceive their surroundings, reason, and adjust their behavior in an unpredictable environment. If we go down here, demand for compute may scale before robot production as developers train models and create digital twins. These will create winning opportunities for companies like NVIDIA, AMD, Qualcomm, Micron, SK Hynix, Samsung, and TSMC, among other chip and infrastructure suppliers. So here's another long roadmap, another great signal of demand from Micron that should be baked into their valuation overall. And also is another reason why I think they'll continue to climb towards that $1,500 price target, because the humanoid market is currently estimated at $2 billion to $3 billion, but forecasts, they range from $10 billion to $25 billion by 2030, with some on the optimistic side saying it could reach $200 billion for a total addressable market by 2035. That's not that far away, guys. It's 9 years away. Significant market, and just showing ongoing demand for Micron, and why I'm less and less concerned about a cyclical boom and bust. Why, at least for me, I've gotten past that traditional cyclical boom and bust thinking for memory, because I believe it's just been structurally re-rated. It is a different structural cycle now that we're seeing with memory. It's beyond data centers. And remember what Micron's CEO said. He said that the memory demand will be 10 times more than the autonomous vehicles. And he says it down below. The autonomous vehicles, they needed about 300 gigabytes of DRAM per vehicle. Now multiply that by 10. That's the memory footprint for every single humanoid robot. Massive opportunity for Micron moving forward. So the last piece I want to cover is just the week ahead. So it's a big week. We got some major events that are happening. I called out some on the screen here, but on Monday, the biggest thing for all of us is the Micron investor event. So even if we see the algorithms kind of start to sell based on that Wall Street Journal article, the great news is we have an investor event on Monday where Micron's leaders can step to the mic. They can share their story, and that will absorb the headlines as well and hopefully create a positive momentum. We also see Camtech reporting out on Monday before the opening bell. So that'll give us a view into advanced packaging, HBM inspection, equipment demand, kind of order pipeline, and just acceleration. On Tuesday, AMD will be presenting at that same event that Micron is at. They'll be presenting in the morning. On Semi will be presenting there as well. But then we have the optical players. So not the optical, excuse me. We do with Lumentum is going to present their earnings on Tuesday. But we see Supermicro, and we also see CoreWeave. So they'll give us great signals across the sector, telling us the type of demand that we see moving forward. On Wednesday, Nebius, Cisco, and Coherent are all dropping their earnings onto the street after the bell. And then on Thursday, we have another major event in SanDisk's Investor Day. It's at 9 a.m. Eastern Time, critically important as they talk about NAND. They talk about high bandwidth flash. This will be a great moment for the company. And then finally, we have Applied Materials that'll drop their earnings on the street on Thursday. So big week overall, lots for us to cover together on the channel as we move forward, because we have everything from the memory wall, AI infrastructure, connectivity wall, and the semiconductor CapEx that will report across this week. So tons of things for us to digest and try to better understand where this trade is moving as we go forward. But guys, overall, I think hopefully you would see that the signals, those were massive stories that got dropped. We had, Apple's kind of, quietly testing some of CXMT. That confirms the global memory supply is continuing to be under extreme structural strain. You see Elon and SpaceX investment of almost $16 billion in a quarter, and the robotics story. Those are long-term kind of, I think, valuation gainers for Micron and the memory sector overall. Great stories across the board. But let me know what your thoughts are below. Drop your comments. Make sure you hit like. Make sure you subscribe to the channel. And don't forget what Vivek said. This price point right now with Micron, it is the greatest buying opportunity or enhanced buying opportunity of the year, as he mentioned. So that's Bank of America's sentiment on as well. I hope you guys had a great weekend, and I'll see you on the next one.